All right, good morning, good morning. It is 6:30. It is October 23rd. It is Monday. Hopefully everyone had a great weekend. Last week I was traveling a bit, had a lot of things going on. This week I'm going to be in this seat every single day, helping everyone navigate what's been pretty complicated times. At certain times in the markets, it's a little difficult, it's a little volatile, it's a little frenetic, and it's pretty much where we're at as we're again October 23rd, which historically is a spooky month, but usually some months like this lead into better trading times. So what we could do is we could control our decisions, not the conditions. I wish this was old school where I could kind of say hello to everybody, my dogs around the world, but the way Twitter is now, you can't interact. So I'm just gonna say what up to everybody out there. It's interesting. It's like I talked to a lot of traders everywhere. Last Wednesday, and I think I spoke a little bit about this, and I must have seen 25 awesome traders that have all been doing it for a long time. Everyone different strategies. Pairs traders. You have the overnight guys. You have the technical guys. You have the arbitrage guys. The algo guys. And I think everybody was worn out. Everybody was worn out from the action, the violence within ranges, the predatory day, with one day to the next as far as the action. But everyone's been there and done this before. Most guys that were there were trading since 1997, knowing that you have really great trading years with follow through, with continuity, and sometimes it's just a little bit different. And this world right now is a little crazy place. You have four things that are really disturbing the markets, right? You have elevated rates. Okay, the Fed's been telling us that they're going to get to 5 and change, and the market didn't believe it, and finally the market's catching up. You have the geopolitical conditions, in many places, but obviously in the last 2 weeks, the horrendous terrorist attacks on Israel added a whole nother dimension to what was already existing between Russia and the Ukraine, and the possibility of China and with Taiwan. And then you have, how long would it take for these higher rates to filter down to earnings? Because the last earnings season or two beat lowered expectations, and it doesn't feel like it's happening this time as margins are starting to get squeezed. And, you have an S&P PE of 18 or 19, which is historically high, with all this nuttiness, including the dysfunction of Washington, where we can't even get a goddamn Speaker of the House. What the fucking sugar honey iced tea is going on, with these people who are supposed to be working for the American public? Well, anyway, I can't even get into that. So once again, you have conditions that are out of our control, but it's your decisions that you can't control. Now, I do know, I was actually in Ohio State this weekend, okay, and I had a friggin' awesome time. I was visiting my godson. I went down with like 5 of my best friends. They're 50 years old. Their kids were sophomores there. It was so awesome to see these kids having a great time. They're Ohio State beat Penn State, yeah. Just the kids, still, taking them out to dinner, and they were so appreciative, and everyone was asking and talking about what's happening everywhere in the world, and and I hate to say it, it's actually pretty crazy not to talk, but I was at AEPI, and how nutty this world is. They got a flag sent to them from National, saying like AEPI stands with Israel. They put it up, and friggin' they were getting people, throwing shit at their house. It's like, what's happening out there is pretty crazy. So I know it's hard to deal with things at times, but like I said before, I was talking to a lot of traders, and some of them are off their high water mark for the year. Meaning, what does that mean? That means like, just say, you got paid on making X amount for the year, and then you come 100,000 off or whatnot. You don't get paid until you make that back. Or like it's October 23rd. Maybe you're down for the month, or you've been down for a few months, and you don't want to deal with it. This is what you have to do, guys. Okay, go up and look at your P&L. Look at it. Face the music. What are you down in 2023? And say, okay, I'm not going to make it all back, but I was watching actually Creed. You guys know I'm a little bit of a Rocky fan, and I haven't watched Creed in so long. And he was fighting Conlon, and all Rocky kept saying to him is one punch, one round, one punch, one round. Okay, same thing with trading. If you're in a rut, one day, not the whole, making back your Pinot, overnight, in one day. One day, make money. 2 days, make money. Make the right choices, the right decisions, the right prep, and then all of a sudden you get a really good week. You take 25, 30% off of what you're down, and then you start feeling better. And then again, one trade, 1 day, 1 week. One trade, 1 day, 1 week. And then all of a sudden you're like, wow, I'm green. I'm ready to go. I can get a check, whether it's the month or the quarter. And some of you guys that actually, don't trade for a living, that tune in to figure out how to put together your long term, whether it's, your 401k, your 403b, a 529 for your kids. When you get headlines like this where you're going to see, new lows from the summer, or some things are 2-3 year lows. China is back at 2019 lows. Just stay the course. Don't let people talk to you about getting out of your long-term goals, which needs to be monthly inflows for 20, 30 years, or for the entirety of your kid getting ready to go to college. Chase is a freshman, and I unfortunately started his 529 a little late. I started when he was 5, so he's a little behind. So during times when it gets really chaotic, I've been adding a little bit more because I have 4 years, and I do think within 4 years, the S&P is going to be back at a new all-time high, if not sooner. But right now, today, it doesn't feel like it. It's fine. Let's get to the action. So right now, the futures are down 20, 25 handles. Last night they were up 10. When they're up 10, I'm like, this isn't very interesting. But down 25 handles after the move that we just saw late last week might create a really nice trade for the day for active cash flow. Might not mean that it's the low of October in the fourth quarter. It might mean that today's just a good trade if you're set up. I know for me, I missed the second half of Friday, so what could I control? I said instead of waking up at 4:45, I'm going to wake up at 4:15. I'm going to make sure I'm in the sauna for at least a half an hour, 45 minutes, because Red Dog was drinking Natty Lights and having, Mexican and a little, hash browns and eggs at 2 o'clock in the morning at Waffle House. I don't usually do that. I knew I was heavy for myself, so instead of saying, I don't want to look at the scale, I'm like, where am I in my range? Okay, because now I better friggin' tighten it up this week and get lower because I did a little too much extra this weekend. So anyway, let's talk. Let's back to the market. So here's the S&P cash. What could you have controlled? If you remember, everybody was talking about a fourth quarter rally, we did get a really nice move off of 42.16. Right here, you had a pocket pivot. Last week, all we did is talk about the pocket pivot on whether it could hold and continue for everybody calling the fourth quarter rally, or was it going to fail? Well, right here, it failed at 43.37. This day was your day to say, you know what? I maybe have 5, 6, 7 positions, things acting well. Now I have to reduce my risk because this pocket pivot broke to the downside. What can you control? Getting out, maybe getting short, maybe buying puts, or maybe just sitting in cash. You can do all those. It all depends, what you're good at. So for today, we're opening below this little 4-day range. October 3rd through the 6th, we were holding 42.16. Right now, we're opening below it. Okay, so the question is, does it reclaim it? I talk about reclaiming. Does it reclaim it? Okay, reclaim it and relieve some pressure and go from red to green and give you levels to trade against after market discovery this morning? Or does it stay below it, which it could, and then you have to start mapping out levels. You have 41.95, which is a level, 41.66, 41.10. These are all, this whole area is just, that could be coming attractions if we don't reclaim 42.16 today. But we'll see. Okay, I'm not getting into these levels yet. Right now, the question is, if you simplify it, does it get below and stay below? Real quickly, some guys like, Red Dog, when are you going to put your wife's blood in the street account to work? You gave us 2 good buys that were 2 good swing buys too, but I don't manage her account like a day trading account. This is an account that I accumulate into the belly of the beast, which really hasn't been the belly of the beast. And then once we get back to highs, I sell it, and then it goes back into a fixed rider. This is something I can't, this is a long-term account that I can't put monthly flows in. Like I have a 401k, I don't care every month. Same thing with the 403b, 529. But for this, so if you take a quick look at the weekly chart, you go here, which also tells a story, right? Here's your weekly chart. So these are all things that I've written about, in the past few months where you have, this was the taper tantrum of 2018. I put her account to work twice, did really well there. Here I put 3 tiers in. Okay, this was the pandemic. Okay, that was probably one of the best time ever for traders, and that's why I say you have to cost average your career. And then you had this huge move where I got her back to cash, and then I think we put 3 tiers into here, and then got back to cash. 2 tiers only because it didn't go low enough. Got back to cash. Another, I think this was 1 tier, and now I put 2 tiers back to work. Remember, this day was 1, and then we had a 150 handle rally. If you mimic that spot. Then here, if you remember, into this time I put the 2nd tier. I didn't trade the first one. And PS, so she has 2 of 4 tiers in. So the last 2 tiers, I'm going to be very, very careful. Okay, because again, this is pretty elevated. Look at where we were at the bottom of 2020, or if you go to the back, I'm not even going to get to that. So at this point, I am not adding. There's no reason to add, considering I already have this print. I probably wouldn't even add at 41.66. I'm not saying I'm going to get there, but I'm just mapping out levels. This was one spot that we held and broke out from, and then this was another one. This is this congestion, and then really all the way down here. So I probably won't put her tier 3 to work unless we see 4,069. I'm not saying we're going to, but if we do in the next week or two, which we could, that's when I would put that in. That's probably, if it happens fast, which the best thing that could happen is if it does happen fast, then the oscillator gets to like minus 77. I could do it. I could probably put some swing money to work, and then we could trade around another position. If we all of a sudden just reclaim this 42.16 this week and we get a good Monday into turnaround Tuesday tomorrow, it's staying there, but I'm going to be trading with my active account, my swing account. I have an option account, and I use them on all different time frames. Right now, my swing account has nothing in it. I'm in a tiny bit of Netflix. I have some options working, but I'm really light. So this could be an opportunity. So write down these levels, okay? If you're looking to mimic my wife's Blood in the Street account, or if you're using my purchases, as a key oversold barometer for you to get a nice 100, 150 handle trade out of, which has happened. So let's go back to what I trade, in my active and swing account a lot, and that's the SPYs and the Qs and, high beta tech and all those guys. So here's the SPYs, okay? The SPYs also mimic the S&P cash. The SPYs broke the pocket pivot right here. Okay, right there, 432.80 is when it was trying to hold here, wasn't easy trading, and then broke. That was your out. Then you had a few little trade of the ranges where it tested levels and then broke, blah, blah, blah. You had to be very nimble. To all of a sudden, Friday we closed at 421.08. This is the lows, right? This is 420.18. So here's where the spiders are right now. Okay, the spiders are down 220 at 419. So let's simplify it here, guys, because this is what we have to try and do. Does it reclaim 420.18? If it does, chances are maybe it tries to go green and we can make some money, red to green. Wouldn't that be fun? That's what I'm going to be looking for. Or is it going to get to this, 420? You're going to see nothing bouncing, tech weak, leaders, not being leaders or leading to the downside, and then it gets rejected there, and then all of a sudden, we're looking at 418, 412. And then there's a gap here at 408, but this is not a today story probably. But anyway, we'll see. I'm going to have the 3 down days. It's always hard to press on day 4 down the same way day 4 up. It's hard to buy, but we'll see. Trending all weekend long was the 1987 crash. So, put a little bit more fear into people. So if you're coming in flattish, you probably should, because there's no reason why you should be in a lot of positions right now when it loses the 821 and the 50-day right here in one swoosh. We talked about that. I've written so many evergreen articles and books and ebooks about the 821 day. When it's above it, you're on portfolio approach, you're managing risk, you're holding nice longs. When it's below it, you're in lots of cash and you're looking to play ranges, look to take trades, net money. Hopefully you can make a little bit of short and sometimes just, catch key levels. Anyway, so right now we're below all the moving averages, including the 200 EMA, and it's right now at $2. So down 2, down 20 handles. So let's go to the Qs. The Qs are going to be interesting because are they going to play downside catch-up, which would be pressuring the market, or does it continue to show some relative strength? So at this point, the Qs also broke this inside range right around this 367, 3 down days. This area broke. So now you have a point of reference right here. This is 51.36. So you write that down. Okay, and this is with the low from Friday. So these are your 2-point references, and here's the 200 EMA. So once again, SPYs, if you look below the 200 EMA, weaker than the Qs. So will the Qs continue to show relative strength, which would have to happen in order for a bounce to be sustainable, or not? The Qs right now are down 2. Okay, so the Qs, let's move this down a little bit, are at 352.50, kind of no man's land, right? Because it's below 354 but above 351. So you could either be buying verse 351, saying, "Hey, I think it's going to hold above it. I want to figure that out," or you could say, "Hey, I want to wait for a test," because some people say, "Hey, look at double bottom," which could be, or maybe get a red dog reversal where it reclaims 354.37, and then you could buy it versus the morning low. All scenario A, B, and C's, or it's weak all day, nothing bounces. TLTs continue to freaking go lower. The 2-year goes to 5 1/8, and you're like, okay, let me try a few things, but I'm not gonna, put all this money to work because nothing's working. And then if you think you're gonna short here and you didn't short last week, it's probably a little tricky. So anyway, write down 354 and 351. Okay, those are your points of reference. If we close below 351 today, then here is the 200 EMA near 345-ish. Okay, if we did get there fast, I'm sure there'd be, first time you touch it, a nice trade there. But all in all, there were a lot of signals, a lot of signals. And as far as the small caps, they're the ones who said, "Hey, this market's super duper weak." The 2-year range in the small caps actually broke below, and on the daily, broke below. So the small caps that actually gave you this head and shoulders top formation and broke the neckline right here have been a sell ever since. And if you look at the weekly chart, it's like, wow, small caps have been a problem almost for like ARK. It's pretty much since 2021, the small caps have been a bear market, even though that nobody talks about it. A lot of people like, oh, the S&P's up 11% in the year, the Nasdaq's up 30%. I'm like, come on. Most stocks are down 80% off their highs. Small caps have been in a bear market. ARK Innovation has been horrendous. She's talking about the only positive she has is that she has a tax write-off for the next 5 years. Anyway, so see what happens here, I guess, with the small caps. The low from Friday is what? 166.43. Got below this 168, got below 169. So wow, 166.43. There is, a lot of carnage out there, I will tell you. So if you are a little upset that you're having some small paper cuts and you're getting worn out, just freaking, it's a new week. One punch, one round, one trade, one green P&L day. Stop it. Okay, now here you have 166.23. Here's your new point. This is a point of reference. This is 163. So I guess you'll see what happens there. As far as leadership and FANG and MedCap, they're all bending. Last week Tesla got had a gap and go to the downside. It's going to be in the penalty box. There's only going to be trades. Elon, he's off the wall, right? When Tesla's below the 21 day, see this guy here? Little wonky, a little eccentric. When he's above the 21 days, he's a little bit more of a genius. And Tesla's been below it for a while now. If you look at Tesla, look at that weekly chart. Okay, look at that wedge. It had an inside wedge. Market didn't know which way it was going to go, and it broke the wedge to the downside. So if you were looking for a key level here, here's a 2. This is like, it's not really that key of a level. This is 195-ish. Here's 189. So this is yeah, that's a spot. So let's just, since we're on the weekly chart, let's just take a look here. Just a big wide range candle. Geez. Anyway, you can't have a high valuation stock like a Tesla, and all of a sudden, they miss on every metric there is. So there's only so much the halo could, shine instead of start dulling. So anyway, look at this gap and go to the downside. I love being long Tesla when it's working. I'm not long Tesla. It actually started to roll over prior to this big gap and go to the downside. Then it took out 216. So now what do we know? This is a pretty big level right here, guys, right? This 212.36, it did close below it. 210, what is that? 210, 210.42, 210.42. Got to write that in. I wasn't here on the close, so I don't have my 210.42s right here. So what's Tesla doing this morning? Tesla is down 255. So Tesla's kind of in no man's land, right? It's below 210.42, which is good. 1, 2, 3 down days. maybe there is a trade here this morning where you should not be long Tesla, especially actively the way that thing broke. Maybe you could buy like just say it gets to 208, market continues lower, it doesn't continue lower, it gives you a relative strength signal and wants to go from red to green. Maybe there's a cash flow trade there. Maybe. Or, market tries to rally, Tesla doesn't move, and then the futures come back down and it breaks out and continues lower. So on this chart, what could you see here? What's this? This is this is like the 195 area. So it is what it is. So I'm going to tactically approach it the way I've been approaching it. Two different tapes. So this is a big gap to the downside, and it's getting downside follow through. Then you have Netflix, which had a pro earnings gap. So I'm in small Netflix, and I'm going to see today, can Netflix hang around? And in a normal world, you could be long versus 192.26, and as long as this pro earnings gap holds, maybe it goes sideways, and then you can get continuation to this gap. But if we're going to be going down for 2 more weeks or so, that's not going to hold. If we go from red to green today or tomorrow, chances are you have defined risk, and it could get above this, and you can make some money. Right now, Netflix is only down $1.20, not too bad. So it's showing relative strength, right? This is down 0.5%. That's down 0.6. This is down 1.2. This is down only 0.4. It's early, but anyway, I'm just saying. So you could also write down this low. This low is 398.01. If you're going to be super tight, which being super tight in this market does not help, or it does help micro-wise, that's something to watch right here. Okay, so if it gets below 398, then all you have is 392. If it gets below 398, comes back above it, then you know what the morning low is to trade against. So this is two different earnings reports. So the question also is, so what kind of earnings reports are we going to have out of big tech this week, and how are they going to react before I get into other names? So if you go to Redler Premium, right? Let's go to Redler Premium for a second. That's my it's my private Twitter feed. Here are the earnings. So you don't have a ton coming out today. Really, on Tuesday is going to be important. You have Alphabet, which has been trying to be a really strong name, come out. It's going to need a solid report, so we'll see what happens there. You have Microsoft, which also has been a chosen one. It's heavily in the Dow and the S&P. And then, I would say 3M's a little important. Coca-Cola's been annihilated. Texas Instruments is kind of important. So these are the real headlines. Then you have Snap that has missed 7 times. I actually have some small calls on Snap, but I got them the right way before it went up $1. But anyway, so that's Tuesday. Then Wednesday's Meta, which is huge. IBM not as huge, but still important. Boeing, that's been dribbling lower now for a month. So you need to know where these things came from and what the street's expecting, so you know what kind of move it could happen. That's a whole different video. I'm not going to get into it, but this is, and then Amazon's on Thursday, with Chipotle, which is a strong name. So look at this and write it down. But anyway, let's go back and get the trend spider here, and continue a little bit more. It's already 3:54. I mean 6:54. I'm supposed to only do this for 20 minutes. But there's so much to do. That's why I woke up a half an hour early, because I need to get prepared. If you're not prepared with multiple plans, you're not going to execute with confidence, and you're not going to make any money, and you're going to blame everybody else. No. Okay? Take accountability, wake up early, get more prepared, get your brain ready so you can navigate the day. Anyway, let's look at Nvidia for 1 second. Nvidia is going to be coming into some pretty big areas. Nvidia also lost special status right there when it broke 463. Then it closed below this little area, couldn't reclaim it. This low here is what? 410.78. So for today, earnings aren't coming out for this one for a few weeks. So, it'll be interesting to see, how it reacts in here. So right now this is what, 409-ish. And this is 403. That's the bottom of the last big reversal candle. So this 401 to 403 is pretty big. If that area does not hold, tech's going to be into some serious downside this week. And then the next thing is the pro gap at 366. So this morning, I think Netflix will be important. Okay, not Netflix. Well, Netflix will be important also. But Nvidia, what does Nvidia do? Right now it's at 409.73. Okay, does Nvidia, make it simple, reclaim 409.80, which is right here? Does it get back above 410? 78, which is Friday's low, or does it come to 401, 403, and you could buy versus that, and if it closes below 400, there's really nothing to 366. So listen, I'm running out of time here. Bottom line is this: do the SPYs stay below that 4-day pivot I showed you, or does it reclaim it? Do the Qs play downside catch up, or hold the low from what's it called, from this date, the September 27th low? If it doesn't hold that, then we're going to be seeing some more downside, some catch up to the downside. Like I just said here with the SPYs, this is 420.18. It's below it. If it's below it, then watch 418.31. Maybe it tries to hold for a half a second or more. Then you have 412, and then this is Friday's low. Hopefully you took some risk off. Maybe you got short. Maybe you're short into the weekend, or if you're in all cash, that's cool too. If you're looking long term, make sure to keep putting your monthly flows in there. This helps your average cost. If you're looking for a blood in the street buy, this isn't it. I already have this print. I'm going to be waiting for at least another 150 handles if that happens. Watch the TLTs. That's what I'll leave you with. TLTs didn't make a new low on Friday, but it's below this 82.74. The TLTs have been something to watch every day. Every time the TLTs make a new threshold low, equity sellers come out. They come out. And where's the TLTs now? Down $1 right there. So 82.21. Okay, so that's below 82.74. Again, just like some of the other concepts. Does it stay below, or does it come off lows, reclaim 82.72, and relieve some pressure? Listen, it's Monday. Stronger heads will prevail. The relaxed mind is a mind that could execute. Face your problems. Don't say, I don't want to see my P&L, or hey, I ate too much this weekend, I don't want to get on the scale. No, look at your P&L and then figure it out. Okay, you don't have to make it all back in a day or week. Listen, if you're up a lot of money and you're like, Red Dog, I'm freaking chilling, I don't know what you're talking about. Well, congratulations. You're doing better than most traders out there right now, and keep doing it. Maybe, email me, scott@t3live.com. I'll have you start contributing on my virtual trade floor. I'll give you 3 months for free. Or you're just smoking mirrors and you're lying to yourself. Either which way, take it easy, take a deep breath. Don't sweat the small stuff, because when the big stuff happens, it's hard. There's a lot of crazy geopolitical stuff going out there in the world. Help where you can. Donate to some of the charities that are important to you. I do believe all life matters, but I also believe that some things have to be done so all lives, don't get wasted more than they've already been wasted. Okay, love you guys. Thanks for tuning in. I'm gonna do about 35 charts now. Continue my process and get ready for the day as well. I'll be around all week.